George Soros, an influential figure in both finance and philanthropy, has a storied life, from his turbulent childhood to his maneuvers in the financial markets to his commitment to philanthropy. 1. Turbulent childhood and survival education. Soros was born in Budapest in 1930, the son of Twatter, a prisoner of war during World War I who managed to escape from Siberia. This experience made my father understand the difficulty of survival, and also imparted pragmatism and survival instinct to Soros, which became an important cornerstone of his future success. During Soros's childhood, the family enjoyed peace and prosperity, but Hitler's expansion shattered the quiet. After the Nazi occupation of Hungary, local Jews faced brutal persecution, and Soros was even required to issue deportation notices to the Jewish community, which was effectively a disguised death sentence. My father took decisive action and struggled through this dark period by selling property, using false identities and bribing authorities to keep the family scattered and hidden. The war brought a huge impact to Soros, however. He was not defeated by the trauma, but in this extreme environment, gradually formed the character of daring to take risks. 2. Study and first entry into the financial world. After the war, Soros moved to London, where life was extremely poor at first. He worked as a waiter and ate customers' leftovers to make ends meet. But in a twist of fate, he was accepted to the London School of Economics. At school, he studied with the famous philosopher Karl Popper, whose notions of falsifiability and perfect knowledge inspired Soros to aspire to be a philosopher like his mentor. However, economic pressures forced him to think about his livelihood. After graduation, he entered the financial industry as a gold stock arbitrage trader, but this work experience did not go well and he chose to quit after 2 years due to poor performance. 3. The rise of financial markets. In 1956, Soros moved to the United States and worked as a trader at several financial firms. In the course of his work, he gradually developed a unique investment philosophy, believing that world finance is an interconnected system, and that classical economic thinking has limitations in the real market. His reflexive theory states that real-world finance is driven by both reality and participants' expectations, and that the gap between the two is a trading opportunity because of biases in human perception. A major turning point in Soros's career came in 1969, when he took advantage of the boom-bust trend of real estate investment trusts. He accurately predicted the volatility of the new investment vehicle, bought it heavily, profited on the rise, and then shorted it before it collapsed, making a fortune. After that, his hedge fund performed spectacularly, nearly doubling every year to $50 million in assets under management by 1973. 4. Cooperation and brilliant achievements with Jim Rogers. On the way to investment, Soros met Jim Rogers, and both of them had a global view of the financial market and believed that the world market was interconnected. They worked together to seize many investment opportunities, such as in the 1970s. They were keenly aware of the impending structural change in the banking industry. Although the banking industry was heavily regulated at the time and was not viewed favorably, but they decisively bought the shares of major banks and made a 50% profit in less than a year. Soros also invested extensively in Japanese, Dutch and French stocks, doubling his Japanese investments in a year and growing his fund by 3,000% in its first decade, a feat on Wall Street. 5. Setbacks and reflections. However, Soros's investment career has not been smooth sailing. In the 1970s, the United States was facing serious inflation, and the Federal Reserve took a series of measures to control inflation. Soros thought this was an opportunity to invest, so he was long-term bonds and short stocks and short-term bonds. But his predictions didn't materialize. The economy stayed strong longer than he expected, and in 1980 his fund lost $80 million, his first major loss, and many investors cashed out. After that, though, he made money on some investments, only to suffer again in the 1987 stock market crash, which wiped out his profits for the year. These setbacks have led Soros to re-examine his investment strategy and lifestyle. 6. The emergence of Stanley Druckenmiller and new developments at the fund. After a series of setbacks, Soros decided to look for a successor. In 1988, he discovered Stanley Druckenmiller. Druckenmiller came from a humble background but had a strong investment track record. Soros spent a year mentoring him before handing him the reins of the Quantum Fund. Under Druckenmiller's management, the Quantum Fund achieved excellent results, which also allowed Soros to focus more on philanthropy. 7. Philanthropy and controversy. Soros was deeply influenced by Karl Popper's open society ideas and established a foundation to promote open society. He has devoted much of his time and money to philanthropy, working to promote progress in education, healthcare, and social justice. However, his philanthropy has also sparked some controversy, with speculation that he uses his charity to reach out to world leaders to gain a deeper understanding of the world economy to facilitate investment decisions. But in fact, the Quantum Fund's outstanding returns after 1990 are largely due to Druckenmiller's management.